Well, in a resumption of normal activity, we saw US markets rise again in overnight trading. However, the gains were pretty subdued. Being a market tragic, I was up this morning watching the last couple of hours of trading and it was dull. It's quite slow, but we did see a lift at the end, and it speaks to the bias in the market at the moment, that in an almost neutral environment, the ending impulse for the US trading session was upwards. So even though they weren't spectacular gains, the S&P 500 was up by less than 0.5%. The impulse and the bias in the market remains positive. And coming into the new quarter, that is important. Let's remember that was a quarter end moment for US, a positive quarter once again for US stocks, and a good result all round. And speaking of good results, NVIDIA last night moved higher by 2.6%. It set a new all-time high in the market. And that means that its market value is now $4.5 trillion US dollars. An extraordinary achievement, the most valuable company the world has ever seen. And in that trade, in that move upward last night, it not only crossed that $4.5 trillion barrier, but it broke through the previous highs to create what technical analysts call a breakout. And that is generally seen as a very strong indication of potential gains in the short term for a stock price. The break above the previous high at $184.50 to close at $186 above that point is an important signal. And plenty of technical analysts will be expecting further short-term gains for NVIDIA shares on the basis of that breakout overnight. Oil is still under pressure, not surprising given the concerns we have about major suppliers bringing supply online, particularly OPEC Plus and the US. Hong Kong remains buoyant, even though we saw holiday-affected trading. Now, Hong Kong is on holidays today, and mainland China on holidays for the next 5-6 trading days. However, Hong Kong will be trading, but we're not expecting any great shakes given the holidays on the mainland. So Hong Kong, however, went into those holidays up another 0.9%, led by the tech index once again. And that ongoing theme we've been talking about for a couple of quarters now of the catch-up that these Hong Kong tech stocks are playing in valuation terms continued in trading yesterday. And the other big news yesterday, of course, was from the Reserve Bank of Australia. It held the cash rate steady, but interestingly, the market is listening more closely to the speech and to the press conference given by the governor, because the governor all year has been talking about the balance of risks, balancing the need to keep the economy buoyant and the employment close to full, against the risks of inflation to the economy. Now, the governor didn't really move her rhetoric from previous discussions, yet the market seemed to take it much more seriously this time around, because having previously priced the chances of a cut in November of 0.25% at around 100%, the market has backed right off to around 40%. And only a 50-50 chance of a rate cut in Australia by the end of the year. So that's a big change in thinking from the market, and that's yet to be reflected in equity markets. I would argue that we're yet to see local investors make an adjustment to that thinking that interest rate cuts might not be on the table. And while the market is pricing 50-50 at the moment, if it backs off further to a less than 50% chance of a rate cut this year, it will be very difficult for equity investors to ignore that sort of outlook. Another big gainer overnight was gold. It hit another high on the spot price, around $3,870. The upward momentum here has been stunning. We've seen that feed into, of course, the gold stocks that are listed locally and around the globe. The gains have been getting steeper. That's the intriguing part. Since August, the gold price is up 16%. Overnight, the strength was very impressive. It's already up 45% year to date, but a number of commodity analysts pointing to potential for a for a further run in the fourth quarter. Australian miners are up 108% as a group year to date. The physical ETFs are up about 40%. Now, there's a difference in the performance here. The ETFs are meant to mimic the gold price and they move upward with it. And that 40% gain in the gold ETFs does reflect the experience of the spot gold market. But miners are leveraged to that. And so the mining result is more extraordinary. Just as when gold prices fall, gold miners can fall further. On the way up, gold miners can be the beneficiaries. And that better than 100% lift in the gold mining index is an indication of that leverage that gold explorers and producers have to the gold price. Whether or not gold miners or ETFs are the best way in depends on you and your personal circumstance and your risk appetite in particular. But looking across the landscape today, we have picked up on Capricorn Metals. It was up almost 3% in trading yesterday. It's up 111% year to date. And this West Australian miner does enjoy a buy rating from a number of analysts. It's grown EPS by 13% on average over the past 3 years. So Capricorn is both an explorer and a producer and has underpinning cash flow to fund its exploration efforts. Share price is looking very interesting, and those investors who are considering further investment in gold might be looking at Capricorn Metals. We also ran the ruler over Block and the US listing in particular because it fell 4% overnight. Block is listed in Australia and the US, and the shares generally move in lockstep because they can be exchanged one for the other. And so Block is likely to come under pressure today given that fall in US trading. One of the reasons for this fall was that Stripe and OpenAI have announced a deal to offer payment services. Now, neither Stripe nor OpenAI are listed on exchanges, but the deal had a big impact, particularly on buy now, pay later stocks and payment stocks, most of them getting hit hard in light of that deal. Now, it's not exactly clear what Stripe and OpenAI will be doing together and whether or not artificial intelligence will be a big aid to payment services, but markets immediately took the view that it would be and put pressure on those payments providers. Might be a good day to be looking around if you are light on in your portfolio. Block itself is down 14% year to date, but there are many buy ratings on it from analysts. Of course, there are also sell ratings, but profits are up, and that turnaround in the profit outlook might be enough. And finally, to round out our 3-stock watch list today, we're looking at Nike. This is a stock that's been much under pressure. It's released its first quarter result after it had announced a turnaround plan previously, and that turnaround appears to be getting traction. The earnings beat all estimates. In post-market trade, it only released this after the US closed, so we're looking at the post-market trading to get a gauge, but the reaction there has been very positive. The stock's up almost 4%. That may not last, but the first blush reaction, a good one. And so it's down 30% over the last 3 years. But it does appear with this quarterly result that the turnaround that it's been looking for is starting to work. There is certainly potential for further progress in this area as they implement the rest of the program. And once again, we're seeing a few buy ratings on Nike. So 3 stocks there: Capricorn Metals, Block, both the US and the Australian listings, and Nike, all worth a look according to our watch list.